Good morning, everyone. How are you guys doing? CPI day today. It was an amazing day, at least for me. I've taken some pretty cool trades. Hold on, I'll show you. Hold on. So I had like a massive runner from yesterday, which I closed a lot of it today. Made some profit on that. And no, it's just a tiny 001, like a micro lot. And then I have another runner, 2 micro lots. I had a 0.25 on gold shorts after today's news. The trade was taken around here during this candle's trading. Sort of like this. Stop loss was above that candle. It almost came and took me out. But yeah, right now the runner is doing pretty well. I was hoping to, and I'm still hoping to get a run on liquidity all the way down to this 1 hour BC, which is around 3607, but we'll see if it's going to do that. This is another short setup that I took on another account during the break between London and New York. So CPI, what did we get for CPI? Obviously, as usual, I like to look for entry setups after high impact news on the 1 minute chart, mainly because that's where you're going to see early entry opportunities. And basically what I was seeing today after CPI was price dropping and then moving up. So if we zoom out, we're gonna see that we had a lot of sell side being swept here, and then with the CPI wick, and then price went up, and with the candle body, it went above all this buy side liquidity above today's London kill zone high. It also created this SMT divergence where you can see that gold did not reach the high of the Asia session, but silver did reach the high of the Asia session. So again, SMT diverges for a continuation short on gold. So if you're thinking that there has been London kill zone high being swept by gold, so buy side liquidity was taken out. Then we've had, and this occurred during a high impact news, and then we've had silver sweeping the high of the Asia session, but gold is not doing that. And then this means that likely silver is sweeping buy side liquidity above Asia session high, and for gold it's enough to sweep buy side liquidity above London kills on high. Hold on, I'll go to the 15 minutes so that it becomes a little clear, a little more clear for you guys. And let me just go ahead and remove all these drawings around here. Okay. So I've had gold sweeping Asia session high, London kills on high, Asia session being intact, leaving that intact. It actually rebalanced a CB that it had created over there at Asia session high. And then we have silver sweeping Asia session high. So we have bearish divergence, bearish continuation divergence for gold on 15 minute, 5 minute, 1 minute. And then we've got this beautiful bearish fair value gap, this one over here. I was hoping for price to tap that. It did not, but then I saw another one being created. So I figured that it's going to leave the previous one, this one, as a breakaway gap, which is exactly what it did. And I've just sorted once 8:45 candle was getting ready to close. Bearish as a rejection from that CB. And yeah, that was it. Right now, it's really interesting whether it's going to, you know, respect, hold on, let me show you, whether it's going to respect the CB that it created here or not on the 5 minutes, this one on the 9:15 candle. It would be really good if it could do that, because again, it would be SMT divergence that would really make a lot of sense, because we have, again, silver sweeping the CPI news high over here. And if gold could reject from this CB, then again, that would be a nice short opportunity. But for this, I would need to see a rejection candle on both gold inside, or as you know, rejection from this CB, and also on silver. Silver should also reject from that CB. And if that doesn't happen, then there is literally just no trade opportunity. I think, yeah, it's sort of like almost taking me out a break even with the runner, but I'll see if it's gonna do that or not. Bottom line is that for now, today has been amazing. This week actually has been a good week so far. It started a little weird, I would say, but then yeah, not anymore. Not really sure though if it's gonna reject from that 5 minute CB, because looking at the 1 hour, there is so a nice bullish SMT divergence that occurred with yesterday's high, with yesterday's low. We'll see. I'm mainly looking for gold to reject around, again, around 36.39, 36.40, and if it won't, then it's probably going to want to take buy side above these relatively equal highs here, which is 36.48, 36.49-ish, or maybe even go above that high, 36.57. It might actually also do that, but I'll see. We'll see. Yeah, I don't think it's going to reject from there. As a matter of fact, it's actually just turning this into a bullish unicorn for the 5 minutes, and could be getting a nice pop into the 940 BSI, or out of the 940 BSI. So far with this, I've gotten, where did I close? 36.23, about 100 pips. 36.23. About here. 2R. Not bad. Not bad for CPI day at all. I'm very happy with today's trading. Yeah, so like I was saying, I'm not really sure if it's going to reject from this CPI from 915. Anyway. So I'll start posting some highlight short videos with everyday's trade, you know, explain the trades that I'm taking more in depth, like, you know, do a more in-depth analysis and explanation of the trades that I'm taking every day. If you guys are interested in that, you can join the memberships. You know, there are 3 membership levels, starting with very modest, very modest prices, like less than a coffee, less than worth a coffee's worth. And if you guys are interested to find out the membership levels that you could join, there is a button, join, right under the video on YouTube, right under this current live stream. So if you guys are interested to see what benefits you could get, yeah, as a member of the channel, just by all means, go ahead and look for that. All right. Oh, is it rejecting from there after all? That would be cool. Although, not really sure. Because you see this one right here. That's a beautiful M1 unicorn long. So we had a push to the downside, which creates a CB. The CB is traded to, and then respected price moves lower, creates a lower low, which also happens to be creating an SMT divergence, where gold goes lower, gold creates a lower low, silver does not create a lower low, and then after that, that last respected CB, which is 925 on the 1 minute, is then inversed. And right now 942 becomes a level of, like, you know, an interest point, if you want, for long setups. So if I were to be taking this long trade, I would have taken it like so. And with a 2R expectation all the way up to CPI. No, all the way up to this SMT buy side around here. Obviously, I would also watch to see if there's going to be any rejection from the 5-minute CPI. You can see that even though silver did create that 945 M5 candle as a rejection from after having taken this buy side liquidity over here, right now it's just, it doesn't care about that anymore because it's just exceeding that with a new bullish candle. So yeah, this would be a pretty feasible trade opportunity right here. Not sure if the stop loss though, because it could also come down into this order block, the 940. But if it's breaking and closing above this high of here, chances are it's not going to come down under this order block, this one over here. So it might actually just keep on going higher. Give me a moment, guys. I'll be right back. Okay, I'm back. What's it doing? Yeah, it's kind of like stalling here. I'm not really happy about it. But the good thing is that it's already closed above the 50% level of this 5-minute BC. 5-minute CB. This one, so it's already inversing it, you know. Maybe it would have been nicer to see like a push down into this 5-minute BC, but yeah, I don't think it's gonna do that anymore. Okay, it already took out my runner, my tiny runner, the one that I had. And I have another runner from yesterday's trade, which again, it's a tiny one. Guys, don't forget to like the stream, please. It would really help the algorithm push my videos in front of other people as well. Curious what silver is gonna do. So this is, I think this is yesterday's. Oh, it's 10 a.m. yesterday. Because you know, if silver is gonna sweep that buy side over here, which is yesterday's New York Hills on high, and gold is still stuck inside the CPI, then yeah, could be a nice opportunity. Would be nice coming for this, the top of this BC right now. But that would mean that anyone who's in longs right now, based on the 1 minute, would have their positions endangered. Yeah. Because there is minor sell side over here. We have this minor SMT SSL, and price could just get that. See, even though we have this SMT divergence here, I would still not go short, even though we did have like a rejection candle closing off of that CPI. I would still, this CPI, I would still not consider looking for short setups because there is no rejection candle on silver yet. You need both pairs to reject. Gold from that CPI and silver from the buy side that it's sweeping. And if silver isn't rejecting, and rejection basically just means a bearish, confirmed bearish M5 closed candle, then it just doesn't make sense to go short. And yeah, there are chances that price might actually leave without me, without you, without us, and that's perfectly fine. Yeah, so you see, like I was saying, anyone who was looking to go long on the 1 minute right now probably is just it's not looking very good. See, this is why shorting based on one single confirmation candle on gold, in the absence of a confirmation candle on silver, it's not a good idea, because you can get stuck in this thing. And it's just not okay. So today's Thursday, one more day and the week is over. What are you guys up to for this weekend? What are you guys up to for the weekend? Yeah, see, this would have eventually been stopped out. Or maybe not, we'll see. Because I've just popped the stop loss right at the mean threshold of this BC. This one. So now you see there is a rejection candle on silver. But the problem with this setting, is that this setting, the way the price action looks like, and also the setup, okay, is that you're gravitating in between two opposing SMT divergences, for shorts and for longs. And the one for longs, like the one for shorts was confirmed, the one for longs is about to be confirmed right now. You would not have taken the one for shorts because it would be taken inside the BC where you might get a rejection candle in order to confirm the long trade. So in this case, what could be done instead of, like, apart from waiting, not doing anything, because you have two conflicting trade ideas, short and long, another option would be to go to a higher time frame, like for example the 30 minutes, and see whether you can figure out if there is a change in the state of delivery at daily lows levels. If we've had daily market structures being broken to the downside enough times so that we can actually consider that the daily bias has shifted bearish. And in order to do that, you just check to see whether two daily lows were broken, right? So for example, this is Tuesday's low. It was broken, then price retraced, did not break Tuesday high. So the low of the break of the low is a break of structure. Okay, I'm gonna mark that as BOS. Hold on. So we have one here. Okay, daily BOS. Oh my god. No. Daily break of structure. And then we've got another one. Which is yesterday's low, which is right here. And again, daily highs have not been broken in the meantime. However, if you zoom out, for example, if you go to the weekly chart, you're gonna see that there hasn't been a weekly low being broken to the downside to consider that the weekly is bearish. So right now, market is breaking weekly highs to the upside. Weekly high, weekly high, weekly high, weekly high, weekly high. And is breaking weekly highs to the upside, which means that the weekly bias is still bullish and it's respecting weekly lows. Now, the fact that we're breaking two daily lows here would normally mean that the daily bias shifted bearish. However, considering that the weekly is still bullish, now you have sort of like a mixed higher time frame bias where your weekly is bullish and your daily is bearish. However, think about it like this. If we are looking at a higher, if we're looking at a higher time frame market where I have the weekly going up, these are weekly highs and weekly lows. The lows are being respected, the highs are being broken to the upside. Inside a weekly range, I'm gonna have days that are gonna go like this, which means that I can break daily lows, okay? And for a short period of time, my daily bias can shift bearish, but it doesn't mean that we're already in a bearish market, right? Because from a weekly perspective, we're still not breaking weekly structure to the downside because most recent closed week's low is still not broken to the downside, right? So the most recent closed week, which is the previous week, the low of that week was not broken yet. So for now, the weekly is still bullish, right? So it means that the daily, which for a short amount of time could be breaking market structures to the downside, it might actually be like this. It might actually be a pullback from a weekly perspective, right? So from a weekly perspective, we're just looking at a pullback, which means that it's likely that once a daily high is broken to the upside again, we're gonna see price resuming the bullish trend and we might actually see new weekly highs being created. Okay, so a way in which to filter out between, okay, what am I supposed to trade? Am I supposed to take the buy trade or the short trade? Because both of them seem to be confirmed. This is a very good way to do that. You're comparing the daily and the weekly biases, and then you're figuring out whether it is more feasible to consider the weekly, which is bullish, and the current daily, which seems to be bearish because it's breaking daily lows, is nothing more than just a pullback from a weekly perspective. or if you are anticipating for weekly lows to be broken soon. So for example, previous week's low, let me check here. Previous week was 1st of September till 5th of September. Okay, so anything fitted inside September 1st to September 5th, that's going to be like the lowest low in between September 1st and September 5th. That's going to be previous week's low. So currently previous week's low is all the way down here. Now imagine, in order for this to be broken to the downside, obviously it is possible, I'm not saying it's not possible, but most likely, since it's a very long way, it's a very long road all the way down till there, it is very, very possible that price might actually want to, you know, induce some more buyings prior to starting that melt, that drop. So where do we have buy side? Like I said, relatively equal highs here. Yesterday's high, New York goes on high from yesterday, and then we have this high over here, which was Tuesday's high, and if it breaks that, that means that it's just creating a new high of the week, high of the current week. So as of now, I would definitely be more inclined into considering long opportunities, and yeah. What time frame do you use for market structure? 15 minute with 1 minute, or 1 hour, or 4 hour? It doesn't matter what time frame you're going to use for market structure. If we're talking about daily market structures and weekly market structures, it really doesn't matter, because if you're going to split a day's time in between 12 midnight open till 24 hours later, 12 midnight, all that price action, the highest high and the lowest low, it's going to be the same price levels on any time frame. So it doesn't matter if I'm not just going to look at the 4 hour. Okay, I like that. This is not my thing. I don't do this. Okay, and if you do this, maybe you should reconsider the way you're reading market structure. And the reason why I'm saying this is because you're only looking at price when you're doing it like this, and you're not considering time and price. So let me pull up a gold. Okay, let's go with FXCM because it's just a clean chart. So if I'll look at gold right here, okay, this is the 30-minute chart, right? So what I want to do is, for example, every green shaded area that you see here, that's Asia session kill zone. And then the first gray area after the green one, that's London kill zone, and then the second gray area, it's New York kill zone. Okay, so basically it means that a day ends when the green shaded area ends, and this basically means an entire day of price action. Okay, and then we're gonna have another day of price action, which is this, and then we're going to have another day of price action, and then another day of price action. Okay, and then in here we had another day of price action like that, and then in here another day of price action, right? So in here I've got 1 day of price action, 2 days, 3 days, 4 days, 5 days, 6 days. Okay, so I have 6 days of price action, with today being the 7th, right? So if you're looking at price action split into daily chunks, daily chunks, okay, like this, then it's going to be extremely easy for you to identify daily highs and lows. So for example, I have this, which is a daily high, okay, and then I have this, which is a daily low, right? Then I'll have this low over here, which is a daily low, okay? And then I'll have this high, which is a daily high. And actually, let me just put them color coded so that it becomes easier for you guys to spot them, to know what days they belong to. Okay, so we're gonna make these purple because they belong to a different day. Like this. Okay, purple. I'm not looking to take any more trades today, so it's just worth doing this exercise with you and for you guys. Then I'll have another daily low over here. Okay, we're just gonna make this, let's say blue, and then I have another daily high, which is right here. Okay, so what I'm doing, I'm just marking the highest high and the lowest low that price created within a 24-hour period of time, starting from 12 midnight all the way to the next day, 12 midnight. So 24 hours of price action. Okay, then next day I'll have the daily low here, and we're gonna make these orange, and then I'll have a daily high right here. No, actually it's gonna be here at the high of the Asia session, because Asia belongs to the previous day. Then I'll have a daily high here, and we're gonna make this green, and then another daily low here. Okay, and then we're having another daily high here, and we're gonna make these what color? Cyan. Okay, and then another daily low right here, which is the low of this Asia session. And today is not closed yet. So what I've done, I've just taken the highest high and the lowest low of each of these, days. And these are my market structures. And it doesn't matter, okay? So for example, these are market structure lows because these are daily lows. So they are time and price market structures. Okay, very important. Time and price market structures, right? And this is also a daily low, and this is also a daily low, okay? And then I'll have the daily highs, which are these. That's a daily high, that's another daily high, it's another daily high, then another daily high here, Asia high, and then I have that daily high, this one, and then I have this daily high. Okay, and these are all the daily highs and all the daily lows that price created. Starting from what date did I start to mark these? Started to mark these on September 3rd, okay? Because it's just a whole price action that fits in the screen without distorting anything. So now you start asking yourself, if I have market structural highs and market structural lows, and I'm not identifying these based on price levels alone, and thus confuse myself, because now I'm gonna think, well, if I'm gonna go to the 4 hour, then the market structural low, it's gonna change, as opposed to me looking at it on the 15 minutes, for example. Because market structures from a price perspective, they're going to look different depending on the time frame you're looking at. But if you're splitting the price action into chunks of time, the way I'm doing it here, everything, the identification of market structural highs and market structural lows is going to become a walk in the park, because you're not doing guesswork, okay? You're not guessing the fact that inside this piece of price action, this is the highest high and this is the lowest low. It's undeniable. You cannot contradict me on that. Okay? So now you gotta ask yourselves, what's happening with the daily structural highs and what's happening with the daily structural lows? And a structural high and a structural low, it can be in one of the following two states. It can be either broken or it can be respected, right? So if I have a high structural high being created and then a structural low being created. If price moves above that previously created high, then that becomes a broken structural high. If price then makes a pullback, goes back down under that range high that it just broke out of, but it does not reach into this last created low, and then it moves higher and breaks a new structural high, then this means that this structural low is respected. Okay? So what type of market is that in which price breaks structures to the upside and respects structures to the downside? It's a bullish market. So from a daily perspective, our daily bias is bullish. Why? Because I have one daily low being respected here. This was Wednesday, September 3rd. Then we have Thursday, September 4th, respected. Then we have Friday, September 5th being respected. Then we have Monday, September 8th being respected. Okay, so we have multiple daily lows being respected, where price makes a pullback but doesn't go all the way down to break the previously created structural low. Then breaks higher, breaks daily structural high, which in here was Thursday, September 4th daily high. And we also had Wednesday, September 3rd daily high being broken. So this is a trending move, and then we have a pullback. The pullback then creates the next day's low, and it also created the previous day's high. And then price goes up, expanding, and therefore going up into create the daily high and breaking previous day's high and respecting previous day's low. Okay, so what am I noticing here? Something which I'm not doing any guesswork. Okay, this is the beauty of this. No guesswork. You're just identifying price levels that already exist, and you're just observing whether price is breaking through them or it's making a pullback. This is structural low, this is structural high. Price starts to make a pullback, but it doesn't reach all the way down to the structural low to break it to the downside so that I can say, oh wow, it broke structure to the downside. It doesn't do that, right? Price can either, so I have a structural low and then I have a structural high. Price starts to make a pullback. It can do one of the following two things. It either goes down to break the low first, or it stops and goes up and breaks the high and leaves the low intact. Which means what? Break a structure to the upside, which means what? Bullish trend. Okay? So if I would go to the 15 minutes, these price levels, they would not change. Because these are time levels, they're not price levels. It's not just me identifying a swing high and a swing low based on what price is doing at those specific price levels. I'm not doing that. What I'm doing, I'm identifying price levels the way that the algorithm or whoever the fuck created them. Okay, and I'm not guessing. If I would go to the 4 hour, those price levels would be exactly the same. But the thing is that on the 4 hour, it would be more effective for you to start identifying weekly highs and lows. So for example, because you're already increasing the time frame, right? So for example, we've had September 8th being Monday, and then September 1st being Monday, and then we've had August 25th and August 18th. So if I'll take a vertical line, I'm going to put one at September 8th, which is Monday open, and then September 1st, so September 8th, 12 midnight. September 8th, 12 midnight. Okay, now September 1st, 12 midnight, right? September 1st, 12 midnight. September 1st, 12 midnight. Okay, now I've got another week of price action. That will be August 25th, August 18th. So August 25th, which was Monday, August 25th, 12 midnight, like that. And then I've got August, what did I say? August 18th, 12 midnight. So let's see, August 18th, 12 midnight. Okay, so inside each and every one of these vertical lines, I have a week worth of price action. So I have the low of the week, the high of the week, the low of the week, the high of the week, the low of the week, the high of the week. What the fuck is going on here? I have weekly low being respected, weekly high being broken, weekly low being respected, weekly high being broken, weekly low being respected, weekly high being broken. What is my weekly bias? Is it bearish? No, it's not. It's bullish. Okay, it's bullish. And I could do this on and on and on. And this is on the 30 minutes chart. So if I am going to go on the 1 hour, these price levels, they don't change, because they are levels that are identified based on time and price, not just price levels alone. If I go to the 4 hour, that will not change. It will simply not change, because it's impossible to change. And the reason it's impossible to change, it's because inside any two vertical lines, the highest high and the lowest low, they do not change. Okay? Inside two vertical lines, the lowest low is that one, the highest high is that one, undeniably on any freaking time frame you would go to. So it doesn't really matter what time frame you look at in order to identify market structures, as long as you have an accurate way of identifying market structure. Okay? So yeah, you use market structure to follow the structure, but the question is, what is the way in which you identify those market structures? Because if the way you identify those market structures is a flawed one that would have you do a lot of guesswork, then guess what? You're not on the right track. And you're not identifying your drawn liquidity correctly, and you're not identifying your liquidity sweeps correctly, and none of that, you know? But if you're using time and price in order to identify market structures, then you can actually have better control of your emotions, because you're not doing guesswork anymore. Yeah, you're not doing guesswork anymore. Okay, so let's see. Buy side liquidity here was swept. Let's see, SMT, BSL, just like we've anticipated. So bam. Okay, so eventually the stop loss would not have been taken out on this trade, and this would have been a almost 2R, with stop loss being really, really close to being taken out here. A better approach would have been to wait for price to rebalance this 5-minute BIST on the 940 candle, and then wait for a single rejection candle on the 1 minute, because we've also had this nice SMT divergence here, you see? So yeah, so with entry on 1005 candle, 1005, and if you want to make it more synchronized with silver, 1006, so trade could have looked like this or like this to have it more synchronized with silver, because 1006 is also a rejection candle, this one bullish on silver, not just on gold. Stop loss would have been the same. The only difference is that you would have no drawdown. Obviously you don't know that at the moment of you opening the trade, so that's up to each and every person to decide whether they want to, you know, enter earlier and risk a little bit of drawdown, or maybe even risk being stopped out, only to then see the actual entry panning out. And that's why it's always better not to open your first trade with your whole risk from the beginning. Yeah. So today's was just like a mini lesson, right? Mini mentorship lesson on how to read market structure correctly. In order to make sure you're not doing any guesswork and you're not you're not just making yourself feel a lot of emotions. Yeah. Okay, so this eventually turned into an inversion, bullish inversion. We'll see. Oh Lord, dear Lord, yeah, this looks really good for a shorting opportunity. Ooh. With the risk of having like a late entry, yeah, we're gonna try this out. See whether it pans out or not. Small risk over here. Because I love the way silver went all the way up to almost yesterday's high. Yeah, yesterday's high. And we have, yeah, we'll see whether it pans out or not. So my entry is not really there because I've entered a little lower. But normally entry should have been once 1025 candle closed. We'll see. Don't have such a big stop loss, so it should be okay. Pretty okay with this. What I'm worried a little bit about is this. I am a little bit worried about this BISI, which also overlaps with this inversion, 915 bullish inversion. It overlaps that too. We'll see. If you could invalidate, like, you know, violate this BSC over here, that would be amazing. Amazing it would be. I'd love to see it do that. I'm gonna look to take some partial around this area. What's that, 36.27? And I want to be really careful what it's gonna do inside this BSC over here, inside 10.06. I love the way silver is expanding right now, but if silver is gonna take out this SMT SSL and gold will stay stuck inside 10.06 BSC, I'm not gonna be really happy about that. But we'll see what it does further. Like, I'd really like to see it start expanding lower, not just, you know, wicks, just with, you know, like that. So you see, technically speaking, if the previous 5-minute candle closed under this BSC, under the 10.05 BSC, and the current candle is just retesting that now inverted BSC with its wick, it should continue to expand lower. The fact that I'm seeing a bottom wick here, it's not something that should occur, and that should be like fixed. Like, and it should start to move lower. Exactly. I'm gonna get ready to take some partial here really soon. See what it does. If it'll continue to push lower, that would be really nice. So also keep in mind that price did not. Oh, it actually did retest that. Okay, it did. See exactly what I did not want to see. Silver sweeping this minor swing low 1005 and not gold. I don't want to see silver rejecting from there. Tricky, tricky. Tricky, tricky. I think I already had like a 2-hour, didn't I? Yeah, I already had that 2-hour. The only difference being that my entry was a little lower than shown here, because I didn't enter as soon as 10:25 candle closed. I actually entered during 10:30 candle trading. Silver just reached into a 30-minute BISI. See here? But I am liking the fact that it's not really rejecting. I mean, at least for now. Let's see. "19 people watching the live stream, 12 likes. I think new people have joined. I would really appreciate if you guys would give a thumbs up to the live stream so that you can help the algorithm and yours truly, you know, to push my videos in front of other people. Yeah, we have some nice emojis as well in the chat, which are available for the Trader Supporter membership channel. If you guys want to find out more details about the different 3 tiers of membership I have on the YouTube channel, you can click on the join button, which is right under the screen, right under the live on YouTube. ¿Qué estás haciendo, chico? Now, I'd like to see 1049 being traded through. This thing should be completely smashed and reversed, inversed, whatever you want to call it, like that. That's what I'd like to see. And I also like to see the slow being completely smashed and pushed through it. Yeah, I would. And I don't know if I'm considering putting stop loss and break even, not really sure yet. Right now, the more I zoom out on a higher time frame, the more it becomes, the clearer it becomes that price is still bearish. Short term at least, or medium term, whatever. Come on, smash through that. Smash through it. Through 1049. Just go. Melt. I don't know what to say. 10:55. If this current 5-minute candle won't start expanding lower, it's likely that I'm gonna get out of the trade, honestly. Just, you know, close most of it and just leave it partial because, yeah. Three minutes until a new 1-hour candle is going to close. 3 minutes. 1-hour candle. It's closing bearish with rejection, and candle bodies here indicate weakness, as opposed to silver where it indicated strength, but gold doesn't really seem to support that idea. And 4-hour candle is going to close in, oh, it just opened. So yeah, 30 minute. What's the 30 minute? 30 minutes is going to close bearish, most likely. On both pairs, but I don't like how it's created a busy on silver, and silver just seems to be just rebalancing that. We'll see. Because right now silver really seems to be staying above Asia session high, which is a price level that gold did not go above, and it might actually just reach into that because that's where the relatively equal highs are. Also, just look at silver inverting this, see, and rejecting off of it. I don't know what to say. It's late, and I think I'm gonna call it a day. So I'm gonna close most of it. Yeah, and just put my stop loss at break even. And I've got 2 runners at this point. $550 today, and yeah, I'm fine. I'm fine. Don't need to be overdoing it. Okay guys, well that was it. Thank you for watching. If you guys have questions, let me know in the comments. And yeah, thanks for being here. Talk to you guys